Welcome to the Business Credit and Financing Show. Each week, we talk about the growth strategies that matter most to entrepreneurs. Listen in as we discuss the secrets to getting credit and money to start and grow your business. And enjoy as we talk with seasoned business owners, coaches, and industry leaders on a variety of topics from advertising and marketing to the nuts and bolts of running a highly successful business. And now, to introduce the host of our show, financial expert and award-winning author, Ty Crandall.
Hello, everybody, and welcome to our show today. So today we're going to be diving into 7 different ways to get a credit line for your business, even when you can't get a bank loan. So there's no question, yes, I do know how to count. I do know that we'll probably be covering more like 10 or 12 different ways that you can actually do this, but I always like to kind of under-promise and over-deliver. So today we'll be diving into at least 7 different ways to get a credit line for your business, even when you can't get a bank loan. We'll actually be talking a lot more than 7. So what's a credit line? Well, when we're talking about credit line, we're talking about ultimately an agreement between a financial institution or a private investor where they establish a maximum amount that you can actually access. And then as the borrower, you can access funds from that line of credit anytime, as long as you don't exceed that maximum amount that they actually issue the line for. And as long as you meet any other requirements and you're actually making timely payments, then you could reuse the line again and again. So there's a lot of unique advantages of business credit lines, including flexibility. And you can use the line of credit, only pay interest on what you use. So this is what a lot of people like most about credit lines is, you know you're going to need money to fund your business, but you might not need it all right now. So instead of getting a $50,000, and paying payments on $50,000 when you only need 5, with a credit line, you could get a credit line for $50,000 and then only use 5 and only have to pay on what you use. And then as you pay down that 5, you can reuse it. So those are some of the main benefits that people get from using credit lines. And now as you acquire a balance and pay it off, you can then use that available credit again and again and again. And this holds true as long as they don't call your line. And sometimes lenders will call your line, which means they want you to pay them back all money that's outstanding at any given time. And we see this a lot of times when people fail to build business credit, is they get credit lines, the lender goes through and does a spot check. They see that the company doesn't have established business credit or bad business credit, and they could call that whole line due. And sometimes it could cause a real hardship because all of a sudden you thought you could pay this back over time and it's due all at once. So that does sometimes happen. But again, if your business credit, if you're building that to be strong, if you're using their credit line responsibly, that's not as common. So these are most commonly requested type of loan that's out there today. They're very popular, but they're also really rare, which is why I wanted to do this with you today, because as many people that come to us, almost everybody wants a credit line versus a loan, but they're very rare and hard to get. So today I want to talk to you about a lot of the options that are available so you'll know some of the ones that might work best for you. Now, many are also tough to qualify for because a lot of them need good credit, good time in business, and even tax returns. Now, we're going to talk about well more than 7 today. We're probably going to talk about 10 or 12 different options. And of those, we're going to talk about ones where credit doesn't matter. We're going to talk about ones where financials aren't needed. But this is pretty common. If you go into your bank to get a credit line, they're going to require you've been in business for at least 3 years. You've got really good personal credit with no derogatory items and good financials. So we're going to talk about some options from your bank. We're also going to talk about some non-bank options that can work for you as well. And there are other credit cards and lines that few know about. And that's what we're going to talk about today. Most of the ones I'm going to tell you about are ones that you're not going to run into at a bank. And they're probably ones you haven't even heard of or know exist. And these are ones that are even available for startups, even people with bad credit, even people that don't have tax returns, available through alternative lenders versus the actual big commercial lenders that are out there. Speaking of commercial lenders, let's start there. Let's start with what you're going to get at your bank if you go to your bank, and that is called CapLines. So according to SBA, CapLines is kind of an umbrella program under which SBA helps business owners meet short-term and cyclical working capital needs. That's exactly what CapLines are with SBA's definition. You can get loans up to $5 million, and you've just got to qualify with SBA as you do with any other loan program. And typically for all the CapLines they offer both. They offer fixed loans if you want a loan or an actual revolving credit line. So I'm going to walk through basically the 5 main kind of cap lines that are available from your bank, because if you walk in there and you have what's required to qualify for an SBA loan, then you're probably going to want to know what's available. And this is kind of a summary of everything that's available. So the first is called a seasonal line. Advances against anticipated inventory and account receivables, meant to help seasonal businesses. So a seasonal business is a business like a ski shop, like a ski resort. Ski resorts are obviously busy when snow is on the ground and not so busy when there's no snow on the ground. So that means the majority of the revenue comes in during winter time when snow is on the ground. There's a lot of businesses like this that are seasonal, that based on the seasons, they're very busy or they're not. And that's what seasonal cap lines are actually designed for. Now, there's also a contract line, which finances direct labor and material costs associated with performing assignable contracts. So this really has to do with a lot of people in the construction industry. A builder's line as well deals with people in the construction industry. It's meant for general contractors, GCs, or builders constructing or renovating commercial or residential properties. And it's basically used to finance the direct labor and material cost of the actual project, was the project itself serving as your collateral. Remember, a lot of SBA loans want collateral to offset the risk. With a builder's line, the actual project itself is the actual collateral. Now, there's a standard asset-based line, which is for businesses unable to meet credit standards associated with long-term credit. So what happens here is this really has to do with people that are paying them long-term over longer terms, and then they need that money freed up sooner. So that's really what a standard asset-based credit line is. And a small asset-based line is really exactly the same thing. It's just easier to qualify for. So you can get a line up to $200,000, and it's really the same. It doesn't have a strict of guidelines as a standard asset-based line does. So these probably won't work for a lot of you watching or listening. Okay, these are really designed for people that have specific industries, well-established businesses for many years, good credit, everything across the board. Maybe you have that, but a lot of people don't. We're going to talk about a lot of other options that may work. The SBA Express program offers access to a line of credit for well-qualified borrowers. You can get up to $350,000, and banks charge as much as 6.5% over whatever SBA charges, and loans over $25,000 are going to require some kind of collateral. So for approval, here's the things that you need for SBA Express: balance sheet, income statement, AR or account receivables if you have them, collateral, and then your articles of incorporation, licenses, any contracts with third parties, and leases. Look, SBA number 1 and 2 we've talked about here today. These really are only going to work if you've been in business for 3 years or more, that you have good personal credit, really some established business credit as well, and have some kind of collateral to offset the risk. If you don't have all 3 of those, then one of these other alternative options is probably going to work better for you. So there's also high limit credit lines. Now, these are available through private investors, mostly, not as much lenders. And these go from $50,000 up to $250,000 lines of credit. These require good personal credit in almost all cases. So a lot of private investors offer high limit credit lines. And by high limit, I mean up to $250,000 that are much easier to qualify for than SBA loans. But in order to get almost all of them, you do need to have good personal credit. And they're also typically going to require tax returns as well. Now, they don't require good business credit in a lot of cases. They don't require collateral in a lot of cases like you need for SBA. The underwriting requirements are not as stringent. But what they're looking for is tax returns to show that you run a good business, that your revenues are increasing every year, and that your tax returns show some kind of profit. And that really is the secret sauce. When you really want to get into long-term low-rate loans or credit limits with higher limits and lower rates, the key is tax returns that show net profits. We are all trained by our accountants to write off every expense and buy a bunch of stuff at the end of the year just to get the amount down of our profits so we don't have to pay the IRS. That is fantastic advice when it comes to saving money with the IRS. But when it comes to getting loans, long-term, low-rate loans or low-rate, high-limit credit lines, it doesn't work. Because in these cases, what they're really looking for is tax returns to show your revenues are increasing and some kind of profits on those tax returns. So the more profits you show, the more money you'll typically get approved for. So with alternative lenders, these are primarily the 2 factors, is good credit and tax returns. And again, the net profit on your tax returns in a lot of cases determines how much money you'll get approved for. And most of them are not going to require collateral. And these are just much easier loans to get approved for and credit lines to get approved for than what you're going to find with your own bank. Now, you've got to supply a personal guarantee as you do with any kind of SBA loan as well. There's going to be some that don't require personal guarantees, but in almost any case where a personal guarantee is not needed, it's because you've got some kind of collateral. In these cases, you don't really need collateral. They just want to see good personal credit, showing that you have a history of paying your bills on time, and tax returns that show that your business is growing, revenues are increasing, and that you've got some kind of net profits. And again, the reason for that is because as you start to move from a small to a medium business, that's just kind of the transition. Small businesses, especially in startup phases, don't have hardly any profits to show. But as businesses get bigger, it's almost impossible to hide your profit, to spend all the money by the end of the year. So you start claiming profits. And that's why they're looking for a little bit more of a well-established business with this kind of product. So you're going to need full documentation. Like I said, tax returns. They're probably going to ask for P&Ls, balance sheets, bank statements, and they're typically going to want good personal credit scores. Some lenders want 720, but if you have 700 or more, you're probably going to be good. And these take some time to underwrite. This isn't going to be 30 days you're approved. This is going to be a longer term to get approved, 60 to 120 days. And some of these are guaranteed by SBA, but most from alternative lenders are. Now, again, 1, 2, and 3 that I've shown you, I'm kind of starting with the most difficult to the easiest to get approved. These are ones that are fantastic. Low rates, exactly what you may want, but I want to show you what's needed for these because in a lot of cases, it's very difficult to meet this criteria to have all these things that you're going to need to be able to get approved. So inventory financing credit line. This is when if you have existing inventory, you use that as collateral to get financing. But you have to have a good chunk of value of collateral. It's about $500,000 or more to actually get approved. You can get approved for a line for about 50% of the value of your inventory, and rates are about 5 to 15% depending on type of inventory. So pretty equivalent to what SBA loans are. And this is a much faster funding than the ones we've talked about so far. In about 3 weeks or less, you can get access to your money. Now, another one using collateral is unsecured business credit cards. Now, this is really one of my favorite programs that exist in the business space because it's simple to get. It's easy to get. It's fast to get. And these are unsecured credit cards that report to, and let me give you a difference. Many banks offer unsecured business credit cards. Okay. And a lot of these report to the consumer reporting agencies, so you have to be careful. Almost all of them need a personal guarantee, and you can get approved usually for about 1 card max because they stop approving you if you have about 2 inquiries or more. Now, most credit card companies offer business credit cards also. Capital One, Chase, Amex. Rates are similar to consumer rates, a little bit higher, and limits are also similar, but some report to the consumer reporting agencies, and some of these report to the business bureau, so you kind of have to be careful. And approval requirements are similar to consumer credit cards. They want to see you have better credit and that you have a history of managing revolving credit accounts. Now, unsecured business financing is much better than this option. So if you go to your bank to get a credit card, if you go to Capital One to get a credit card, American Express, I did a video the other day on the best credit cards for 2017. We did that live, I think, about 2 weeks ago on YouTube. Well, we talked about Capital One. We talked about Chase. We talked about Amex and the things you have to look out for. You got to look at how long the 0% rate is, how much your APR is going to be when the 0% expires. You also want to look at, do they report to consumer or business credit reporting agencies? Even so, if you get one of these, you're only going to usually get 1 or 2 before you're going to have a hard time getting approved. Well, that's where unsecured business financing comes in. And it is really one of my favorite programs, one of my 2. We're going to cover my 2 favorite funding programs today. And one of them is this UBF program. So with this one, when you apply for a regular credit card, you're putting an inquiry on your consumer credit report. And then when lenders see these, they're not going to approve you for a bunch more credit cards. So here's why inquiries matter. Because if you go and put even 2 inquiries on your credit report, you can ruin your ability to get this kind of financing. Inquiries really matter here because they really want to see that you have less than 6 inquiries in the last 6 months. Now, with this, you're working with, I say a lender, but it's really a finance source that actually specializes in securing business credit card. Very rare, Very little known about program, which very few lenders offer. And that's probably why it's so popular with us. I mean, it's not uncommon for us to process 5 to 20 new applications a day for this program because it's an easy way to get money. You can get a lot of money, and a lot of people just don't even know it exists. You can typically get about 5 to 8 times the approvals that you're going to get on your own. So if you go into your own bank to get a credit card and then you go to the bank next door, this program is going to give you 5 to 8 times the amount that you'd ever be able to get on your own. And it's also about 5 to 8 times the amount of your highest revolving limit account you have now. So if the highest revolving account credit card you have on your credit report now is 10 grand, you're going to get about 5 to 8 times that, which is about 50 to 80,000. Now, what happens is you're working with a finance source that knows the actual credit issuers to apply for, the ones that will give you the most amount of credit, the best points, the 0% terms, and they apply for them all at once. So then that way you're not getting declined because of those inquiries. And that's how they're getting you 5 to 8 times the amount. Now, you've got to have usually the individual approvals range from 2 to 50 grand. I see, and we have on our website, many of these $50,000 approvals where you're getting one account for 50 grand. And again, you can get 5 to 8 of those accounts. How high your limit is again, depends on how high your revolving credit card limits are now. You usually get 5 cards that only report to the business reporting agencies. So unlike accounts you may find on your own, and I'll give you a perfect example. A lot of people use Capital One. They have a Capital One Spark business card. But Capital One reports to the consumer and the business reporting agencies. That's a problem because as you use Capital One, you will damage your consumer credit scores because a third of your consumer credit score is utilization. These cards report to the business credit reporting agencies. So not only are you getting access to money, you get up to 150 grand with this program, you're building your business credit at the exact same time. And you can max these credit cards out if you want, not affect your consumer credit because they don't report to the consumer credit reporting agencies. Plus, you're getting 0% interest for 6 to 18 months. And then you're paying normal credit card interest rate APR after that. Now, you got to have good credit to qualify. Now, most sources require 700. We work with a lot of sources where you only need a 680 credit score. And if you don't have that, you might have a guarantor that does. Could be a family member, could be a friend, could be grandpa, grandma, could be somebody that wants to invest in your business, a potential business partner. Anybody with a 680 FICO score now or higher can get you approved. You shouldn't have any derogatory items on the credit report. You've got to have at least one credit card on your credit report for $2,000 limit or more, or an auto loan or a mortgage. One of those will get you approved. You need to have 2 inquiries or less in the last 6 months. This has now changed. You can have up to 6 inquiries in the last 6 months. And you're going to pay about a 10 to 15% fee. Most of the lenders we work with charge about 9.99 or about 10% on this program. Now, these are other cards there are other cards you can get with the same program that report to the consumer reporting agency so you can get more money, but those are consumer cards versus business cards, and you can actually get credit lines that take the cash out. So let's take a look at the summary of this program. You're getting up to $150,000 in financing. How much you get depends on how high of limits accounts you have now. So if the highest credit card limit account you have now is 20 grand, you're going to get 5 to 8 times that, which is, 120,000 you're going to get approved for. If your highest limit account's 10 grand, you're going to get 50 to 80,000. You can get this as a startup. This is a no doc program. You do not need tax returns. You do not need bank statements for approval, nor do you need collateral. Super simple. All you need is yourself or a guarantor to have a 680 FICO and you get approved. You're getting 0% rates for 6 to 18 months and you can physically take the cash out. So I call this a credit line hybrid program because they're actual credit cards. You get the benefit of 0%. You don't get 0% financing on credit lines, but you can take the cash out at 0%, which is something you can't do with credit lines. With credit lines, you can take cash out, but you don't get 0%. With credit cards, you get 0%, but you can't take cash out without paying a cash advance fee. With this program, you get both. You could take the cash out and you get 0%. So it's the best of both worlds while you're building your business credit at the same time, which is really why it's one of my favorite programs. So again, 5 times the approvals of what you'll usually get on their own, much easier to qualify for, 680 score. I've got all different kind of criteria here, but it's actually 6 inquiries in the last 6 months with no bankruptcy. And it's much easier to get approved for this than a lot of other kind of financing that's out there. So again, don't forget, I've given you our number, 877-600-2487. That's 877-600-2487. If you have that criteria, feel free to give us a call. We'll talk to you more. With that program, you can get approved same day. They'll tell you how much you're going to get approved for. And when you say, go ahead, let's do it and sign the paperwork, it takes about 1 to 3 weeks to get funded. So an unsecured line of credit from a bank. Again, alternative lenders, another program where they offer about 50 to 150 grand. They are going to want to see tax returns. Over 100 grand, they're typically going to want to see your P&L and balance sheet. And these are a little bit faster than the first program we talked about from alternative investors. This only takes about 30 to 45 days to get approved with 7 to 10% rates. And approval amounts usually 10% of your annual sales. So whatever your revenue is, you can get approved for about 10% of that if you have good credit and tax returns. So this is the second program we've said the same thing. If you have good credit and tax returns, it opens up a lot of different credit lines. 2 I've talked about. The last program I just showed you was no doc. So with that one, you don't need the tax returns. All you need is the credit to be able to get approved. But a lot of them, you're going to want one of the 2. Now, that walks through all 7, but as I said, I kind of under-promise and over-deliver. So I definitely have more to go through here. I probably have another 3, 4, 5 what we're going to walk through. So another one's called Revenue Lending Credit Line. Now, this is only available with some lenders, and it's instead of just regular merchant cash advances. So what's going to happen is this. If you have consistent revenue of $10,000 a month or more, and you've been in business 1 year or more. Now, if you haven't been in business 1 year and don't have $10,000 a month in revenue, then still pay attention because this is one of the easiest lines to get. So you're going to need to know this exists. So as your revenue climbs, you'll be able to get it. So what happens is first you get a loan. They give you a loan that's usually equivalent to about 10 to 12% of whatever your bank statements reflect your deposits are. Whatever your deposits are, you can get about 10 to 12% of that. So if you deposit 200 grand a year to your bank account, you're going to get 10 to 12% of that, which is like 20, 25 grand. Then if they're also can offer you a credit line. Now they typically want to see either better credit or longer time in business, 2, 3 years plus to get this. And they'll oftentimes offer you another line outside of your loan for $20,000. So you get a line of credit and you actually get a loan. When you apply upon approval, you're offered the actual credit line as well as the loan. Now, it's a little harder to qualify for than just a cash advance because you need to have better credit or a compensating factor like good bank account management. So here's what I'm saying. For the loan itself, for the merchant cash advance, for the revenue lending program without the line, credit doesn't even matter. You can get approved no matter how bad your credit is, as long as you have 10 grand a month in revenue coming through your bank account. Okay. And if we have 1 year in business, 10 grand a month coming into your bank account, you manage your bank account responsibly, which means you don't overdraw the bank account, then you're probably going to get approved for the loan no matter how bad your credit is. If you want the line also, they usually want a compensating factor. Better credit, it could be longer time in business. It could be that you have really good bank account management with a bunch of money in your bank account at the end of each month. If you have a compensating factor, they're probably going to offer you the loan and the line, and funds have to be used for the actual business. They want 20% profit margins or more for approval. And again, a lot of that will reflect on your bank statements. Sometimes they may even ask you for tax returns to get the line. Remember, the loan's easy to get. 10 grand a month in revenue, 1 year in business, you're probably going to get the loan as long as you don't ridiculously, irresponsibly monitor your or mismanage your bank account. But for the line, you got to have that compensating factor. Sometimes they may even want to see tax returns to be able to get approved for this. Now, you can get unsecured cash advances, also known as merchant cash advances, which is similar to revenue lending, but they look at credit card deposits. And again, it's just an easy, fast, easy way to get money because they don't really care about your credit score. So remember, the loans itself, the cash advances, are fairly easy to get. Most lenders go down to a 500 FICO. We work with a lot of lenders that don't even care what your FICO is. It's the lines that require a little bit more with this to get approved other than just the actual cash advances. So bonus number 2, account receivable credit line. I told you I had 2 favorite programs. And one of them was unsecured business financing. I love it because you can get it as a startup. You don't need collateral. It's no doc. You can get up to 150 grand. You get 0% financing for 6 to 18 months, and you can take the physical cash out. I mean, that's just awesome. This is my second favorite program, which is fairly new. This is a new program that just kind of hit the scene this year and actually gained some traction. Now, I call this an AR credit line because I don't yet have a fancy name for it, but you don't even need account receivables to get it. There's 2 different ways to get approved. You can get approved for a $100,000 credit line, and what happens is the lender will basically, if you wanted to get approved, we would send you a link. The link you click, they basically want to plug into your bank account, your bank statements, or directly into your accounting software like QuickBooks to get an approval. And then they're looking for 2 things. They're looking for either account receivables, or now they have a newer program where all they want's revenue. If you have revenue of 100 grand a year, or AR, meaning other people owe you money and you have account receivables, then you can get approved for this program. Now, again, responsible cash management is the revenue, or account receivables can get you approved. You can get up to 100 grand. This says up to 10. It's up to 100 grand. But here's the cool thing about this program. The rates are the lowest I've ever seen. It's a 0.5% to 0.7%. So a 0.5 to 0.75% interest for every week the money is outstanding. To give you a real idea of what that means, it means for about every $1,000 you take out of the line, you're paying about $50 in interest. So it's super cheap. Now, they're going to give you 12 to 24 weeks to pay back what you borrow. So let's say you get a $30,000 credit line and you use 5 of that. Well, they're going to amortize the 5 over 12 to 24 weeks to get their $5,000 back. And again, for every week outstanding, you're paying about a 0.5% interest is how it works out. So again, an example is $1,000 you borrow, your payment's about $50. So I love this credit line because there's no credit check at all. No personal credit check, no business credit. They don't even look at your personal credit. There's no inquiry on your personal credit report. So again, I just talked to you about unsecured business financing, how inquiries matter so much. That's why I love this program, because your personal credit doesn't matter. All you need is to show that you're managing your revenue responsibly and that you've got about 100 grand a year or more, that you have some kind of account receivables. Now, if you don't have either one of these, again, don't forget about this. This is one that you could get soon after once you start to establish some revenue. Cheapest rates I've ever seen of a 0.5% to 7.75%. And again, personal credit doesn't matter, nor do you need any collateral for approval. Bonus number 3, corporate credit lines. So you can use vendor credit to get store credit counts, then fleet credit, then Visa cards and MasterCards without a personal credit check or personal guarantee. This is business credit. It's also referred to as corporate credit. Really, the definition is corporate credit, although you'll commonly hear me refer to it as business credit. What true corporate credit is credit that doesn't require a personal guarantee from you or a personal credit check. So if you can get, no matter how bad your credit is, let's say your credit's horrible, you don't have revenue yet, and you don't have any kind of collateral. Well, then you can still get this. You can still start building your business credit using vendors like Uline and Quill. You then move up to stores like Staples and Amazon and Walmart and Home Depot, Lowe's, Sam's Club, Costco, almost every retail store. Then you move into fleet credit, which is auto vehicle maintenance, repairs, fuel. Then you move up to Visa cards and MasterCards, actual revolving credit cards and lines that don't require a personal credit check and personal guarantee. You can get vendor credit right away, and to get all the way to the end, the top of where you need to be to get credit lines and loans takes you only 6 months when you build your business credit. So we've got a bunch of free information on our website, creditsuite.com. Top right, you can get our social media channels that can help you with this. And then if you want the fastest, easiest way to get it done, you can contact us. We can talk to you more. Now, if you're a truck driver, well, then there's actually financing for smaller commercial lenders smaller commercial lenders that are for credit lines as well. These are specialty agencies that lend just for commercial vehicles of all types. And often you can even have a bankruptcy and still get financing. They typically don't want to see like past due child support liens, stuff like that, vehicle repos especially on your credit report. And there's some companies like Ings Commercial Finance, Full Circle Finance, and Trust Alliance Capital that work really well if you're a truck driver, if you're looking for a truck or looking to refi a truck you already have. And some of these companies also do heavy equipment like Bobcats as well, if you're in that industry, and you can get terms like up to 5 years. So a really cool way to go if you're trying to get a credit line or, a loan for the actual financing of a semi-truck or to refinance a truck you already have. A backlist financing. So if you're a bookseller or publisher, backlist can be a valuable asset and source of revenue as well, because basically a backlist is older titles which still sell, and they can be classic works, textbooks, older works by an author who's suddenly hot. So like any other asset, you're basically using that as collateral for financing. And if you're a bookseller, well, then you can actually get approved for this kind of financing. Now, dating is extended payment terms for large backlist orders. So if you do fit into this rare kind of niche category, that's something you definitely want to ask for. And again, you can get terms up to 60 days, even up to 180 days. And publishers may also want to make a deal with booksellers to get better terms. So it's another kind of really weird kind of niche type of financing. So look, credit lines are available everywhere. I mean, the way you finance is only limited really by your imagination. So consider what your industry sees as assets and use them for collateral, or use personal assets if your business is new. So there's a lot of things we've talked about here today. And this is the best way that I can sum this up, is that in order to get approved for most kinds of business loans, well, not most, pretty much every kind of business loan and credit line that exists, you need either cash flow credit or collateral. So in the beginning, we talked about what happens if you have all three. We talked about SBA CapLines and how you could use SBA CapLines to get approved in the SBA Express program. But what if you don't have all three? What if you only have good credit? Well, then we talked about several options. If you have good credit and consistent cash flow, and you could prove that with tax returns, you have two of the three, then that opens up those alternative loans where you can get up to $250,000 in financing with rates of 8 to 10% on average, just because you have tax returns to show a profit or good credit. What if your strength is only credit? Well, then that opens up the unsecured business financing program where you could use your credit or that of a guarantor and get 0% financing for 6 to 18 months. No doc, no tax returns, no bank statements. So that's your strength's only credit of you or a guarantor. What if you don't have good credit, but your strength is cash flow? Well, then we talked about cash flow based credit lines where you could get loans and advances no matter how bad your credit is, regardless of collateral, and sometimes get an actual credit line as well as that. So that's if your revenue is actually your strength. We also talked about another one where if you have consistent revenue of $100,000 or account receivables, well, that could be your strength to be able to get you financing as well. And then we also talked about what if collateral is your financing? What if you're a bookseller and you could use that as collateral? What if you want to buy 18-wheel trucks, or you are a truck driver that already owns a truck? What if you have securities like stocks, bonds, even 401ks? What if your collateral's inventory? Then all those credit lines open up for you. And if you don't have anything, if you don't have cash flow credit or collateral, well, then we came to the very end to business credit. And we talked about how you could still get vendors like Uline and Quill to establish an initial credit profile and score, and then use that established credit profile and score to get store credit at almost all major retailers, and how to actually get fleet credit for auto vehicle repairs, maintenance, etc. Even how to get Visa cards, MasterCards, cash credit as well. So we've given you an option for everything. All the way from if you have all three, cash flow, credit, collateral, SBA loans. If you only have cash flow and credit, all those options. If you only have credit, if you only have cash flow, if you only have collateral, we talked about those options as well. We talked about some niche products, and we also talked about business credit, which is a solution as well. So no matter what your situation is, we talked about an option for you today. You either have cash flow, credit, or collateral, or you don't. If you don't, you still want to know about these programs because you'll grow into being able to qualify. And if you don't have any of them, well, then that's where business credit works perfect for you. If you have any questions, just reach out to us direct, 877-600-2487. We'll answer questions on any program that you have questions on. We can oftentimes get you approved same day. We never charge you a dime to get a loan, not a dime. Okay, the finance sources sometimes pay us a referral fee, sometimes they don't, and that's how we get paid. So we never charge you a dime, and it doesn't cost you more to use us. It's actually less because we negotiate the terms on your behalf. So again, it's pretty cool to just have people in your corner that can help answer all your questions, help you get pre-approved. No money's exchanged. All the lenders and sources we work with do not charge upfront fees, so you'll never be charged a dime of money to know how much you're actually going to get approved for. Once you get approved, if you decide to move forward with any of the credit lines we talked about, then you're going to pay whatever the normal fee the bank has. SBA charges 3 to 5 points plus, whatever the bank's fee is. So every lender charges points or interest or of some sort. And again, I showed you what a lot of those terms were during the show today. And again, if you have questions on any of that, give us a call. 877-600-2487, info@creditsuite.com. Thanks for tuning in today. I appreciate you joining us. If you have any questions, we'd love to talk to you more. Thanks, everybody. Hope you have a great day, and I look forward to helping you get credit and financing to start and grow your business. Thanks, everybody.
You've been listening to the Business Credit and Financing Show with your host, Ty Crandall. Watch for our next episode to get even more insight on financing and growing your business. And don't forget to check us out online at creditsuite.com for even more business growth strategies.